Well, to find out how the Aussie market and the Aussie dollar have been reacting to both the quarterly inflation read and perhaps Governor Lowe's speech, but also where he is finding value investing in global equities, I'm joined by Morphic Asset Management's founder and co-CIO, Jack Lowenstein. Jack, thanks for joining us.
Good to be back, Helen.
Now, let's talk about this sort of slightly lower than expected inflation figure. And yet, as we were just talking with our reporter, Leo Shanahan, Governor Lowe didn't really, he sort of said, well, that's in line with our forecasts and where we expect it to gradually climb up.
Look, I think that it does mean the case for interest rate rises this year and many rises next year has been weakened, and the markets are reflecting that. So they're hardly expecting any rise this year, and maybe one or so rate hikes next year. So I think that the Australian dollar is doing the work the government wants for it anyway, because the Australian dollar, as long as it's up around these levels, is probably enough to cool things down.
Yeah, all right. So that Australian dollar rally, we said at the outset of this program, it's still just over 79. But, you know, do you see a continued pause in that rally?
I think it's going to struggle to get through 80 at the moment, and most of the chartists are saying that there's a kind of a cap. If it does get through 80, it's sort of that means that no more than a couple of cents higher than that.
Well, now, why is that? Because we've also had commentators on the channel who've said, oh, it's going to get to 85.
Well, chartists move in mysterious ways. We listen to them, we don't always understand them, we have to give them some respect.
Oh, I'm glad to hear that.
But look, I think that my perception is that the inflation figures are probably getting close to the bottom. So that, you know, I think the most telling evidence of that is that the number of full-time employed is rising, and people who've only got part-time work, those numbers are slightly falling off. At the same time, the participation rate, which is the number of people who are working out of those who could work, is drifting up as well. So this is all slightly encouraging. I suspect we'll see, rather like a number of other countries like Japan and the US, we'll see wages start to surprise over the next year or so.
Yeah, all right. Now, I want to ask you about the Indian stock market, because I know you have been, you know, looking at India, you've been investing there. I also had a guest on yesterday who was talking about, to date in 2017, Indian equities, the stock market, has delivered 21% returns compared to Australia's something like 1%. Now, does that match with what you're finding?
Absolutely. India's been on a tear, and it's done so despite the relatively strong Indian rupee. India's now got the world's 8th largest foreign reserve, so the currency looks reasonably stable. Most stocks in India look a bit expensive, but I think what the market is expecting is, unlike Australia, India's still going to be on a rate cutting cycle. So inflation in India, which has been very, very high for many years, is now down to a couple of percent, and short-term rates are around 6%. And so the things that are going to really make India continue to power ahead are a slight decrease in local interest rates, a pickup in credit growth. And the thing that's amazing to us about India is it's done so well despite the fact that that the bad debts that were accumulated by Indian banks over the last sort of 5 to 10 years have still yet to be fully worked through the system. So there's lots of not so good stuff that could exit the picture and make India do very well. And there are a lot of very cheap stocks still in India, incredibly. So there are still opportunities there, even if some of them look a bit bubbly.
All right. Now, are there any opportunities in Spain? Because I know you've been watching Spain and you've been a bit surprised by the rate of recovery if you compare it to Italy.
Well, look, I just got back from, must confess, a holiday in Spain.
I suspected as much.
But what I can tell you is that things in Spain looked dire about 3 or 4 years ago. Unemployment was about 25%. Now, unemployment has come down to 18%. Now, that's still a horrible figure.
Still dire, but it is better.
The progress has been enormous. Meanwhile, the amount of Spain is running a current account surplus, and the premium that the Spanish government has to pay to borrow compared to Germany has fallen from 5% above the German rate to about 1% above it. So it's been a phenomenal improvement. And I think the lesson that Spain teaches other countries is you have to address your problems aggressively. They did address the banking crisis there much more aggressively than say Italy. And the other thing is it's still a very low-cost economy. So I was shocked when my waitress at the restaurant I went to 3 out of the last 5 nights I was in Spain told me she gets paid €1,000 a month. That's about 1,500 Australian dollars. So
yeah,
you can see how low labour costs are there still.
Yeah, exactly. But then it's interesting, Jack, just really briefly, because of course the Catalonia region, which is where Barcelona is, and so that's northeast, they want to secede, don't they? And yet they've also, you know, the Basque region in the north is really still very much they feel very separate, but they have been given a lot more autonomy. Is this something that Catalonia will get?
Catalonia's got a fair bit of autonomy already. I think that the Catalonians, that's the richest region of Spain, and Barcelona is a very wealthy city, a very beautiful city, I should add. But I think there'll be a sham referendum because the central government's refusing to recognise the referendum. The chief of police in Catalonia just resigned rather than have to get caught in the crossfire.
Wow. Well, I guess they don't want to get rid of, you know, they don't want to let this very rich region go.
Well, imagine, I hope I'm not going to offend the Scots viewers here, but you know, Scotland's one of the poorest parts of Britain. So if it left, the rest of England would look richer. Britain would look richer. It's the reverse in Spain. Catalonia is the richest part in Spain. So. Right. Clearly, nobody in the rest of Spain wants to see them go. But I don't think it'll happen. I think it'll be a false alarm again.
All right, Jack Lowenstein, the Co-Chief Investment Officer at Morphic Asset Management. Thanks for joining us.
It's been great to be here.